Hello there, Adam Gower here, and welcome to the GowerCrowd Podcast, the real estate crowdfunding show Deal Time, where you can learn about active crowdfunded real estate deals directly from the sponsors themselves. Subscribe to my free weekly newsletter at GowerCrowd.com, where you'll get links to the podcast, as well as news and updates exclusively from the world of real estate crowdfunding. Sign up at GowerCrowd.com so you don't miss out. Also, if you want to pitch your deal on the show, just go to the podcast page at GowerCrowd.com and look for links on how to submit your deal. Please note that while I don't endorse the deal, sell securities, or make investment recommendations of any kind, some sponsors are GowerCrowd clients. Now listen in and learn about the next great deal on the GowerCrowd Deal Time podcast. Here we go. Erin, Rob, fantastic to see you again. I know you're dying to talk about Madera. I am too. First, introduce yourself, name of company and position, and then we'll talk about the deal.
Sure. Rob Boese, CEO of Warehouse Partners.
Erin Volpp, COO of Warehouse Partners.
All right. Now, the moment we three have been waiting for. What is Madera Industrial Warehouse? What is the deal? Give me the high-level overview. What is it?
Madera Light Industrial is a ground-up light industrial development in Madera, California. It's an opportunity that we're very excited about. It's almost 150,000 square feet, 72 units of light industrial.
Yeah, so we have 2,000 square foot units going in. So these 72 to 74 units are about 2,000 square foot each. They're inline spaces. It's in an industrial zone in Madera. The land was acquired at a great price. The zoning is correct. The entitlements are underway, and we're closing on the land at the end of the month and ready to break ground in August.
Right. So we are all in California.
Yes.
And when you say, and I've done all my development in California, such as I've done in America. When you say the word entitlement, that's a frightening word in California. Yes. So how the heck do you think you're going to get your entitlements?
Yeah, super question.
We have our investment thesis as the path of least resistance. So we only target land that is already zoned industrial, that is already in an industrial area, and that the city wants to be industrial property. So we make all their hopes and dreams come true. We have nothing to worry about.
So why 2,000 square feet? So you're talking, you need to find 72 tenants for 2,000 square feet each in Fresno. Are there really that many tenants that want 2,000 square feet in Fresno?
Yeah, that's the difference between Fresno and the greater Fresno Madera area. It's really the application of all of our knowledge and experience, knowing the tenants, knowing the marketplace, and the answer is yes. And the answer is yes, and then some. And the reason why we chose Madera is because it is not Fresno. And there's a very specific reason that Erin's going to talk about in terms of distances and commutes.
Yeah, so Madera is about 35 minutes to the north of Fresno along Highway 99, which for those who are not familiar with California, it is one of the major business thoroughfare highways for the whole state. So when you are in Madera and you're working that you live there, right? But you have no inventory available to you, your only option is to go to Fresno. So you're driving down the highway 35 minutes in the morning. Then you get to your warehouse. Then you have to go back to service your clients who are in Madera, and then back and forth all day long until you get back to the end of the day, lock up, close up, and then go home. You're spending your entire day on the highway.
There's nothing for lease in Madera.
There's absolutely nothing for lease in Madera. If you go on CoStar, LoopNet, whatever the site you're using to look up your spaces and you're in Madera, it's going to come up with nothing.
What's the population of Madera?
Let me find that for you.
And while you're doing that, I just understand the size of the city. If it's 35 minutes from Fresno, it's presumably its own city. That's kind of what you're describing.
Yeah.
So what are the primary industries in Madera? My understanding of that area of the world is it's primarily ag. Correct. So what kind of tenants are going to be taking space with you?
Yeah. You want to talk about population and tenant
Yes.
profile?
So you're looking at within the 10 miles closest to the site, you're looking at about 100,000 persons. So not a huge population as compared to a lot.
No, but that's about double the size of San Luis Obispo, isn't it? 45.
The greater Fresno area has about 500,000 people in it.
Yes.
And so Fresno, Madera, sort of as a combined metro,
It's closer to 1 million
Yeah,
for the whole area.
it's quite sizable. But like most things in Central California, if you're not, in a major city, it's very spread out. So there's a lot of people over a wide area.
Because it's ag, there's a lot of land.
All right. So who are the tenants then that you anticipate being in the middle of an ag world?
Yeah. So you're going to have a lot of agricultural related tenants, seed feed, manufacturers, maintenance for agricultural property equipment. Different trades. You're going to have your basic commercial real estate, commercial tenants like your electricians or contractors, all of those type of people. And then you're also going to have more regional and national businesses that need a presence in the Central Valley. And Madera, being the center of the Central Valley, is the perfect spot, especially since this site is 5 minutes from the highway.
One of the things that we found out in all of our leasing experience and having done 1,000 leases or renewals is that a lot of large companies only need 2,000 square feet. And you think of large corporations, big e-commerce companies, even Fortune 100s, you're thinking they need tons of warehouse space, 1 million square feet. But sometimes in a municipality, they only need 2,000 square feet. Whereas our project, if they do want 2,000 or 4,000 or 6,000, we have the flexibility to combine units and offer them more space.
I was going to ask that. You can pull walls down, presumably.
Yeah, they're just demising walls in between each of the units, so it's not an issue to cut a hole in the middle.
Fascinating. Yeah. All right, so tell me, why do you like this deal in particular? Tell me the story of this deal and why you like it.
Yeah, and one of the reasons we liked this deal, and we got a good deal on the land. That's the basis. We did our due diligence and we got a good deal on light industrial land in a light industrial area in a municipality that really, really needs light industrial, right? And so that's just the basics. And so we started there, and then we looked at the tenant demand, right? And so there is that underlying tenant demand, right, in Madera, and those commuters. And we believe that even people from Fresno will commute north, just because nothing new has been delivered in this space, the multi-tenant light industrial space, small unit, in the last 20 years in any significant amount. And so the layout, the feel, the security, and our planned tenant mix, that's all based on our experiences. What works best, right? What are the tenants looking for the most? And
keeping that end user in mind as you do the development. And you're not just plopping something down because it makes sense on the spreadsheet. We've had the experience of operationally knowing what tenants want and why they want it. And if you don't give it to them, what are you going to get in rents versus if you do give it to them?
Small example is yard space. And sometimes we get asked, what is a yard? It's a fenced area that you can store things outside, wash vehicles, keep inventory, load vehicles, that type of thing. And so we have gated and fenced areas with each unit, which we found out is critical to light industrial tenants. That is one of the primary things they look for. Small office, maybe a shop sink on the inside, interior restroom, which sounds for us very, if you're not used to light industrial or industrial, sounds pretty basic. You should have a restroom and an office inside your warehouse. But the other inventory in our market built a long time ago, shared bathrooms. So you might have, 50,000 square feet of multi-tenant industrial that shares one restroom.
Especially in Fresno and in California, where it gets up to 100+ degrees in the summer. So one of the other items that we are definitely providing in this deal is a swamp cooler and forced air in the office space, so they have some kind of relief from the.
Wait, a swamp cooler.
Yeah.
Oh my God! What? So what happened to air conditioning?
So one of the things that we
a swamp cooler that takes me back so many years. I remember when I was first in San Diego. I have to share this. First in San Diego, my then girlfriend's father hooked up this swamp cooler. And it really worked well, but what it's the last time I've ever heard the term. It's 40 how many bloody years ago.
And that's funny because that's what people's impression of a swamp cooler is. It's the predecessor to air conditioning, right? It worked,
the dinosaur.
But
he hooked it up to the hose pipe. It had water running through it.
Yeah, exactly. And so that's part of the demand on industrial for swamp coolers. It's a very basic layout. It's the balance of our space is warehouse, right? And typically in our environment, in this market, there's no cooling options. And so when we interview,
incredible.
Yeah. And so when we interview, tenants and, what their hopes and dreams are, what they look for in a space, why doesn't this space work for you in the industrial project you're in now? And there's no cooling. And so we talked to them about, would you pay this premium for air conditioning, right? And the answer is generally no. But
unless they are some kind of food storage, they need that cold storage aspect. Or if you're in the wine industry, you need that. If you're going to be over in slow area renting some warehouse.
Yeah, and it's interesting because the price of the build and the project itself goes up astronomically when you add air conditioning because you need insulation. The roll-up door has to be considered differently. Just the space is configured differently to retain the cool or the heat in the winter.
So the swamp cooler is like a golden ticket.
Yeah, it is.
It's fascinating.
It is the happy medium. It's relatively efficient. It does the job to cool the space enough where it's not unbearable over the summer. But the tenants aren't looking at, an astronomical price for a space that's relatively small. And so it's well balanced in the marketplace. So like yourself, a lot of people are interested in the swamp cooler because they have the similar experiences.
Well, I imagine that what you're talking about is a lot higher tech than this contraption my girlfriend's father put up on the wall. I was like, the whole thing. It was amazing. I can still see it in my mind's eye. All right, let's talk about numbers. Yeah. Numbers. So tell me, size of deal, minimum investment, how much you're raising. Give me the high level numbers. Yeah.
So the construction is about 17 million, and we have 85%, up to 85% loan to cost. So at a 70% loan to cost, which is what we're looking at right now, it's about 5.1 million that needs to be raised in equity. So that's our capital raise. That returns a 60%, 60-40 split investor to GP with a 10% annualized pref. And then the equity multiple for the deal is 1.78.
So that's an internal rate of return of above 28% because of the shortness of the deal.
30-month term.
Right, short turnaround. And co-invest. What's your co-invest?
The GP co-invest is 10%.
So you're putting 10% in.
Yeah.
And this is a ground up deal. So your pref is accrued and paid at exit. Is that correct?
Yeah. Clock starts on the pref as soon as it's put to work. That's right.
And it does start upon lease up as well. So during the lease up and the cash flow, that also plays into it. We're going to have probably 12 to 15 months of cash flow.
Right. You'll start paying down the accrued pref and then eventually pay off the capital. Minimum investment?
$100,000.
$100,000. All right. And you've got a 10 pref to a 60-40 split. No other hurdles.
No. It's a short-term basic property. We're going to keep it simple.
Yeah, it's simple in all of its elements, right? That was part of the original thinking is let's make it simple in terms of a project. It's very much middle of the road in sort of its application on the investment side, right? In terms of prep and split for the investors. And we didn't want to do any hurdles of any significance, catch ups or anything like that. So it's a relatively easy investment to get your head around. And so it's mostly about, understanding the team, our goals, the investors' goals, of course.
The investors are really investing in our experience as operators and in industrial real estate.
Yeah. And again, the feedback that we get is, why is the deal so short? Can we stay in the deal? Right?
All right. So actually, that is what I was going to ask you. So you've got a 30-month turnaround. The strategy is to build, lease up, stabilize, and sell. But you have some other exit possibilities? Just run through those as well, because they're very interesting.
Yeah, and so there's a couple of interesting options for us. And not only do we know the marketplace for your traditional exit, we can sell the property to a number of different investors that we know occupy the marketplace, but we can refinance or recapitalize the project and perhaps own it and in a different vehicle to warehouse partners that's an affiliate. But we would essentially buy it or refinance and take out all the investors, right? Get them paid a good return, a solid return, if what we promised or better, hopefully, right? And so we're looking at an exit with the buyer in hand, and that perhaps might be us, right? We would recapitalize the project, take out the construction loan, and put a permanent financing loan on top of it. And then there's an option, because we do get asked all the time, is why so short, right? Why can't we stay in the deal once it's stabilized? And really, there's an option for us to keep a lot of those investors who really do want to stay in the deal. Once they start learning about it and they do their due diligence, I love the concept. I love the team. I love the asset class now, because I believe in the tenant demand. You've shown us the examples. Can we stay in the deal, right? We want for some investors, that might be the best part, is the stabilized part. And so that's something that we continually review, just because of the demand that we had, because we thought originally the demand would be, come along for the development ride. Let's get you a wonderful return on your investment on a relatively short basis. And then
build project two.
And then build project two, and I'll give them another offering. But we found that a lot of people do want to stay in the deal. So that's how much people believe in it.
Okay, so I have a question for you. So I invest 100,000 in your deal. I get approximately 2% ownership in the deal, presumably, to a 10 pref and a 60-40 split. And then let's say you refi instead of selling.
Yeah.
And so now what happens? Are you going to pay me back my pref, give you my equity, and then I stay in the deal with 2%, or you buy me out? How's that look? How have you got it set up at the moment?
So at the moment, we would
on a refi. I'm talking about a refi.
On the refi. Right now, the plan is that the investors would get taken out, and then if they wanted to reinvest in the deal, tentatively, we would assume that
it would be another vehicle.
Yeah,
because this vehicle is set up with that exit date, and that's because half of the investors are interested in staying in, but a lot of them are appreciative of the short timeline and the high return and quick turnaround. Because every single investor is going to be a different space in their investment profile, right? Like they maybe want a risk factor, maybe they have a family event or some kind of life event happening in a few years where they don't want to reinvest. So this gives us the flexibility to say, hey, you want to come on board? Let's talk about that in this vehicle.
It's interesting, the investor profile that's attracted to our.
It's a wide variety.
It is a wide variety, and we've been part of private equity investments before and different investment vehicles, and it's interesting that this has probably the widest appeal across different investment spectrums, and so it's been interesting to meet and understand those type of investors, and they all have different types of feedback in terms of wanting to stay in the deal, wanting to get into phase two. When are you going to release information on phase two so we can consider the deal before? And we always say, well, let's get phase one started, right?
Let's get phase one under the ground.
And then we can start considering either keeping you in the deal or getting you into phase two or our projects that we have planned in the future. And for us, critically, this is not a one-off project, and that's the critical thing. It's not we're going to build this. Some people say, build and flip and things like that. We don't even use those terms. This is an investment vehicle that delivers a great return that we've conservatively estimated. And we want to keep our investors either in the deal, the current deal, or into phase two or another project.
The next one up and down the 99.
And if they all look and feel the same and deliver the same returns or better over time, then we would be really happy. But we were really looking to cultivate investors that are interested in investing with us for multiple projects. So this is one of many.
So what is the two last questions? And I haven't thought of the last one yet. I can only think of the penultimate one, which is this one. What is the downside potential? What's the worst case scenario?
Worst case scenario is the entitlements don't go through. For some reason the city decides, even though they're on board with the deal, just clarifying that it doesn't go through, and we have this land that we own. Well, then we go back and turn around and sell the land for a profit because we got such a good deal on it. and it's partially through the entitlement phase. Second phase of that, if we complete the entitlement phase and the capital doesn't finish raising, then we sell an even better land deal because it's fully entitled and ready to go. And here's a project, and we actually probably have a buyer for that already.
So for limited partners, there's no recourse on any type of financing to them. It's very much a passive investment, no capital calls or anything of that nature. And Erin touched on it. We got an excellent deal on a number of different fronts in terms of reserving our materials, purchasing our materials ahead of time to maintain our timelines, which a lot of people listening to
the commodities are crazy right now.
Supplies in metal, wood is a big issue right now, and manpower is also another issue. So we have a lot of those things considered already. So, at risk, obviously investor capital in any deal is going to be your invested capital is your maximum, risk profile. But for us, this is a very limited risk project compared to other development or even value add, just because of the simplicity of the project and the feedback that we've gotten from the municipality in terms of zoning, and we talk about entitlements, we're talking about the area, light industrial and things like that, and the tenant demand. So we feel as though the risk profile is relatively light.
We've done a lot of work to adjust the risk so far.
Yeah, when we talk about due diligence, this is an extreme due diligence exercise for us.
One last question. So this is not radio, it's podcast. But imagining it was radio and it only played once, and the most important person who could possibly be listening tuned in late, and they only hear the last thing that you say right now, what would you want them to hear about this deal?
The thing that I would want them to hear about the deal is that where Madera Warehouse Industrial is a ground up development, it's a wonderful opportunity for investors. And the greatest analogy that I can use for our deal is, and I'm going to use a multifamily analogy again, is that it's a market where no new apartments has been delivered, right? I'm using apartments as our analogy. And then you're building a new apartment building, right? And think about that type of demand, right? And you have an old apartment building with old units with no renovations, and you're going to deliver the new project. And it's very much the same in industrial, particularly in our Madera market that we've chosen. We've gotten a good deal and we're going to deliver superior returns on it. It's a very exciting project for us and our investors.
Erin Volpp, Rob Boese, warehouse partners in Fresno, California. Thank you so much for pitching your deal on the Deal Time podcast today.
Thank you for having us.
If you want more information on this deal and on all the others in this new series, plus if you want access to the latest news from the real estate crowdfunding industry, and if you want to be the first to know about some amazing proprietary industry data that we're putting together for you, subscribe now to the GowerCrowd newsletter at GowerCrowd.com. It's totally free, and it is the most comprehensive source of news and information about real estate crowdfunding anywhere on the planet, all there at GowerCrowd.com. Thank you for joining me and for listening in to today's deal. This is Adam Gower wishing you well and signing off.